Hello and welcome to Manufacturing Excellence, a podcast by Seraph Consulting, where we interview people pushing industrial businesses forward. Guests include operational experts, those investing in and financing products, as well as specialists with unique insights to help navigate some of the most difficult points in a business's lifetime. Today, my guest is Doug McCormick, who is co-founder and managing partner of HCI Equity Partners. Before working in private equity, Doug was in mergers and acquisitions at Morgan Stanley and previously served as a captain in the U.S. Army's 25th Infantry Division. He holds an MBA from Harvard Business School and has a BS in economics from the U.S. Military Academy at West Point. Now, HCI is a private equity firm that specializes in investing in and building industrial businesses with portfolio companies including TSM Corporation, Pacific Defense, and Echelon Supply and Service. In the episode, Doug will discuss both their operations and investment evaluation process. This includes the way the team is structured to provide support to each of their businesses, how they execute their strategy of combining multiple industrial businesses in fragmented markets, as well as some broader conversations about how private equity will work with manufacturing businesses going forward. I think it would be great if you could just start off and give a quick overview of what HCI does and what you invest in and how you differentiate yourself from other private equity firms.
Sure. So HCI is a lower middle market private equity firm. We manage about $1 billion. I think what's most differentiating to us is kind of our engagement model. And we really think about it as kind of three prongs to a stool, if you will. We have an investment team, we have an operations team, and then we intend to partner with the management teams of the businesses we invest in. And collectively, we think those skill sets, when you combine them with capital, gives you an opportunity to dramatically improve or scale a business. Our mandate is essentially to pursue consolidation strategies in large markets in North America where we can, find a fragmented market and really transform the business with those capabilities I just mentioned, that partnership with the management team, and then, going out and building a set of capabilities that is well positioned to do M&A and really scale the business.
And so when you say operations in this sense, is that the operations of successfully integrating companies in an acquisition? What are some of the pieces that your team has had to develop to support those companies?
I think our process starts with alignment of end state and vision. Like until you know where you're going, it's hard to have a clear path of how to get there. And so we spend a lot of time with our teams trying to think through, leverage their experience in the market with their customer set. How do we improve the value proposition and what do we want this business to look like in 5 years? And then that kind of leads to what's the value creation playbook. In many cases for us, the value creation playbook really starts with org design and team development. And then kind of once you get that in place, you think about organizational capabilities. And when you've got those two, we kind of front end load, get the team set up, get the organizational capabilities in place, and then you begin to introduce scale and complexity. And that's either by investing in organic growth or acquisitions.
Getting that right organization and team structure, does that mean you have some recruiting support? And is that one of your roles as a firm to constantly looking for executive talent to support these businesses once you buy them?
Yeah, I would say it's working with a management team in partnership to identify the gaps and then go help them fill the gaps wherever they may exist. And so we have a broad network of recruiters and folks we work with. We also work with recruiters for, general employee base as well. We view human capital as the same as financial capital, right? You got to inject it into the business if you're going to position the business for growth.
Got it. And with that plan, how much of that is defined before you decide to make an investment? Like how detailed does that get? And
maybe I'll start with the things we look at when we go evaluate a deal. We kind of look at four things. We look at the quality of the business model. We look at the end market. We look at kind of the ability to apply, our playbook, which is unique to us. And then we look at, kind of the quality of the team and their receptivity to executing that playbook. And so with that in mind, it gives us a general sense of kind of what the opportunity is. And candidly, we try to size the prize, but we don't have a clear playbook at the time we get a deal done often, right? So it's work in process. And in some cases, you don't have total clarity for 90 or 180 days. You have conviction that the opportunity exists, but you're still working through exactly what the priorities should be and how to get at it.
And when you talk about the opportunity existing, is that you see many ways for this business to improve, or is it usually you have one big theme that you know you can execute on?
We like to think that it's multiple ways to, kind of dramatically drive value. And, candidly, that's based on humility. If I've got one value creation opportunity, I don't have a lot of degrees of freedom to be wrong. And so the way we think about it is we're buying a good business with a bunch of embedded options that can create value over time. We don't have conviction that any one of the 7 things we're going to do is going to work perfectly, but we collectively believe with those 7 things, those 7 tools, if you will, we'll be able to go deliver an aggregate opportunity that is exciting.
Yeah. Are there anything, I know you've been investing for a while, but is there anything that continues to surprise you when after you buy a business about the way it's run, or some things that aren't in place that you have to do pretty early on in a lot of these?
I don't think there are trends in the surprises. The only certainty is they will be, right? So they will exist. We always say 2 kinds of forecasts, lucky and lousy, right? And so, I think part of our job is to be cool under pressure and acknowledge that the world's a dynamic place. Change management is a dynamic activity, and it's never going to be exactly like you envisioned it, but hopefully the opportunity is consistent with what you thought it was.
When you're investing, does it obviously takes a lot of work to probably in that first year after you get a deal done to put the right organization structure, the right goals, that plan in place. So does that impact how many deals you try to do in a year, or is it when the market presents opportunities, you take them and try to scale up your team?
Yeah, I think it's a little bit of both. I think we are very kind of purposeful about, we look at return on investment and we look at return on effort, right? And our team only has so much capacity, and so if we're going to engage, we're going to engage meaningfully. It's going to take capacity of our organization, so we've got to ensure we're picking the spots where we see really big opportunity, and big opportunity defined as not only, kind of IRR, if you will, but big dollars at work that can result in big multiple of invested capital.
Are there any challenges you're experiencing right now that you're trying to navigate across multiple portfolio companies? I know for one, we're definitely seeing recruiting, just talent, all levels of companies. Are you seeing some other big challenges in the industrial and B2B spaces?
If you think about trends broadly, I would bifurcate them in, kind of 2, short-term and long-term. From a short-term perspective, I mean, I can't, certainly not in my career have I seen a more volatile kind of 2-year period with so many kind of dynamic inputs. So, pre-pandemic, or during pandemic or post-pandemic, labor, inflation, supply chain disruption, employee shortages. I mean, it's been, kind of across the board. And my view is for teams to just effectively navigate that in a way that preserved, kind of customer service levels, or at least customer relationships when the service levels were not there, and to do so reasonably profitably has been, quite a big task. There's been a lot of focus on just quality execution in a very dynamic market to get our portfolio, kind of across the chasm, if you will, in a position where we continue to create long-term value. And so in some ways, it's like short-term basis, you have to earn the right to invest on the long-term value creation play. So we've been playing a lot of defense in just keeping up with that volatility. I think in terms of long-term trends, I think the last 2 years have created some interesting, kind of narratives out there in the marketplace for the businesses we see. I think one is onshoring, and I think customers of ours were playing in the supply chain. For over a decade, it was all about price and delivery, and today it's about continuity of supply, resiliency of supply chain, and price. So, price is always going to be a factor, but I think that's an important shift in the conversation. I think on the margin that helps larger, more sophisticated businesses who are able to deliver, that entire value proposition. Labor has been super challenging. I think that's going to continue to be a long-term trend. And I think it has for us some interesting implications around automation and around nearshoring as a way to address that. And I think the other long-term trend that the pandemic accelerated, it's kind of a convergence. The pandemic accelerated it. It's been happening, is what we kind of think about as the democratization of data. The ability to get good information, good data, to make really good decisions and evaluate your market, not on a macro basis, but a micro basis, is just getting better by the day. And so we think that, combined with artificial intelligence, is a really important long-term trend that has a lot of implications to businesses like ours, which are, kind of very non-techy.
Yeah. And when you're entering these businesses, is that a capability that you've seen emerge more and more in the businesses you buy, or is that something you're typically having to bring in?
Yeah, so we're playing in the lower end of the middle market, right? So we're trying to buy enterprise values of 50 to 100 to start, and then use acquisition to really create a business of scale. Candidly, like at that level, we're not seeing a lot of those capabilities. So I think that is part of the value, likely part of the value creation playbook.
And when you're navigating challenges with these companies, what does that look like? I'm sure you're on the phone with them quite a bit, but do you have people that fly out to their site and try to guide specific projects? How do you actually go about breaking down what is a pretty big challenge?
Yeah. So first of all, our engagement model is relatively intensive. So we expect to be alongside of our teams, helping them drive important initiatives. And in many ways, we almost look at it like a co-pilot situation. Like, let's agree on what the game plan is. Let's agree on the 3 or 4 big opportunities, and then let's leverage each other's capabilities to create the capacity to go get it done. Because it's like that old saying, you got to change the wheels on the car while it's moving. We're still running a business. We're still serving our customers. We're still, managing employees. So it's about creating the capacity and bringing the skill sets to go make it happen. I think just people have gotten comfortable doing a lot of that remotely, but we still spend a lot of time on site. If you looked at our employee roster, almost a third of our talent group has operational expertise more so than deal expertise. And so those folks in particular are working day to day.
And those are people, when you say operational expertise, they're people that have worked in companies in the sectors that you invest in, manufacturing, food service, transportation.
Yeah. So we have an operations team, and we actually define that team around functional area. So we've got one leader of the entire ops team, and then we kind of define each of the individuals as like a superpower, right? So we have one person that does all things around efficiency and freight and procurement. We have somebody else that does Salesforce excellence. We have somebody else that's technology. We have a finance functional expert, and we have a sales functional expert. And so that complementary skill set, they're all pretty good utility infielders, but they each have an area that they're pretty deep in.
One of my favorite podcasts is called the Private Equity Fundcast, and it's by Parker Gale. They're a tech firm. They invest in mostly software, and watch their team over time as they've added their ops. It's been the same as you've described, really getting functional expertise, human capital development, or things like that.
Yeah, and you had mentioned earlier about the way the whole asset class is evolving. I think in the asset class, that's one of the key trends. As more capital comes into the market, it becomes competitive, and people continue to innovate. And this ability to be a good owner is really one of the key innovations, I think.
Yeah, it's a little different than barbarians at the gate.
Yeah, totally agree. It's interesting. That's in many ways the reference point that people still come at this from, and the market's just totally changed in 30 years, 40 years.
Continue to be amazed how just one stat you hear or one reference point can last for a long time, regardless of how the truth has evolved. Now, you had a military background. Have there been any things that you had to unlearn from that background in investing? I think a lot of people can recognize the merits of the process and some of the rigor that they bring, but is there anything about military that doesn't transfer well to business?
Totally. High level, I would tell you, when I came into the business in the late 90s, I actually would have told you I didn't think there was much relevance to the military experience and what I do in my day job. Over the last 20 plus years, I've evolved in my thinking about what my job is and how I'm creating value. And so I used to think I'm an investor, and now I think I'm really a change manager who uses capital as a tool to do that. I view myself as a leader, and one of my core competencies is leadership. In many ways, I think the military experience has been very helpful for me and a useful experience. There certainly are some differences. Some of these are obvious, but first is the military prioritizes consistency and quality of execution, the expense of innovation, more hierarchy, right? And I think in a business environment, best ideas have to win. Innovation needs to be a little bit more freeform, and decision-making is a bit more collective. And so I think that leadership style is one where I think you can go further, but it takes longer to get everybody rowing in the same direction, and it's more consensus building. So I think that's one of the key differences. The other one that I think is maybe a little bit surprising, at least it was to me, I didn't appreciate this for a while, was, in the service, they have the luxury of everybody that's there believes in the mission and the esprit de corps that you create with your fellow service members is a very powerful motivator. And in business, I don't think you have that same obvious gravitation to the same mission. And so I've found, are being very purposeful about articulating a big, bold vision. Where are we going with this business? How do you fit in? How do we create a culture that is high performing, but also people really enjoy? They like their colleagues. It's not cutthroat. Those things are really important. And I think you got to be really purposeful about using those as tools where I didn't have to do that in the service. So that's been an evolving area for me.
That common bond is something I really come to appreciate, the storytelling aspect that some business leaders are able to do, be able to infuse purpose in not just saying this is a nice place to work where we pay you well and the people are talented, but even bringing like a great amount of importance to what might appear as like a simple mission, like rubbish collection or something like that. You can really differentiate yourself in business.
And honestly, that's such a different skill set, right? Like my bias is I'm analytic, so I ground my decision making in the math of what the business implications are. And that's obviously really important to be right. But if people don't follow you, right doesn't matter. Creating the storytelling is a good way to say it.
Yeah. So when you're going in and competing, and I think that almost all deals now are pretty competitive, even if it's somewhat proprietary. I think most businesses, maybe you might be able to get a couple at your size where they aren't going to run a process. But how would you advise a business owner that's interested in selling or partnering with a private equity firm? What would you tell them to look for in a private equity partner? What are some of the red flags as well?
The first thing is I love the framework that you're coming at this with, because I think in many cases, when somebody decides to sell their business, they get into the mode of I'm trying to sell my business. And I think your question begs that they should turn the tables a bit and be saying, how do I interview? How do I evaluate and find the best capital partner to go execute my mission, right? So when you think about it much more broadly like that, it's a powerful kind of mindset change. A very simplistic recommendation would be ask yourself a couple questions. Does this partner have the same alignment of where I'm trying to go? Does this partner have a set of capabilities that will help me get there? And can I have fun? Can I see myself working with this person or this team? Do I think I can have fun with it? I think all of these journeys are so consuming and, such an effort that if it's not fun, it's also not worth it probably. And then I think there are some tactical ways you can kind of explore some of those questions. So we beg our prospective sellers to go interview other people we work with, because I think that's a real important way to get a sense of how do they really behave after the deal's done? Are they high integrity? Are they good people to work with, et cetera? I think additionally, I would be asking the advisors, how have these guys behaved after they signed the letter of intent before they've closed? Do they deliver on their promise? And I think that's a key question. I think a lot of times people sign up the aspirational deal, but not always the one that is most likely to happen. And so really kicking the tires on the actionability, I think is another one that I would really push for.
Interesting. And so when you're investing at HCI, are you typically looking for founders or owners or management that wants to stay on and roll over? How do you approach that?
Yeah. Of a portfolio of roughly 15, we have one business that we bought from another financial sponsor. Everything else has been first generation or first institutional capital in. We generally like those kind of opportunities. And it does matter to us that the investor participates on a go-forward basis. And I think that's important for a couple of reasons. We want to create a shared vision with the seller, and we want them to feel like they're bought in to where we're headed. And candidly, in our mind, it also creates a competitive environment that we're likely to do better in. And what I mean by that is, if you're selling 70% of your business, you care about something other than simply money. If you're selling 100%, you want certainty and you want price, and that's all you really care about maybe. And so we're looking for situations where someone can look at what we can bring and value that in addition to the capital we bring.
Yeah, so they're looking at your operations team and saying they're going to probably get me a higher return over time because they've done it with other businesses, and these are resources I wouldn't have had access to as whatever size business I am now. So is that generally what they're thinking?
Absolutely. We're trying to offer a solution that gives them meaningful liquidity, gives them enough skin in the game that the second bite of the apple may be as big as the first, and is a good home for the legacy that they've been working on for the last 30 years in terms of brand, community they exist in, and the employee base.
And when you acquire, are you looking to change the culture at all? Is that usually a part of that? And how does having a previous owner involved impact that? Are they usually bought into any sort of specific areas of culture that need to be improved in order to get to the next level?
We often say we have a standard process that we go through as we're trying to implement our value creation model, but then it ends up being bespoke because every circumstance is different. So I'd kind of say the same about culture. Every culture is different. What we try to convince our partners is change management is always bumpy, right? So we should expect to have ups and downs in terms of how the organization evolves. And what we've got to do is trust in, we agree on the end state, and we trust the process that as long as we're openly communicating, we're going to get there together. And so I think cultures do change, but it's not necessarily because it was a good culture or a bad culture. It's that because we intend to dramatically change the organization that we started with, and the culture, the people, the systems and processes will come along with that.
Have there been any new functional areas that you've added to your operational team in the last couple of years? I know you mentioned data. Has there been anything else that?
Yeah, I'd say it this way. So, we started out earlier in the conversation. We were talking about the reputation that private equity has as cost cutters, and so I think often the efficiency metrics are the ones that are easiest to get to. They're the most tangible, and so as I think about the evolution of our ops team, we probably started more on the efficiency aspects, quality of execution, quality of like supply chain, manufacturing, et cetera. And over time, I think what we've done is become more offensive with tools that are oriented around growth. So I would view sales operations excellence as a tool that's oriented around growth. I would view human capital as growth oriented, and technology. And so in many ways, I look at those three as inserting capabilities into the business that are in the path of progress of helping us accelerate growth. And the biggest one, candidly, has been Salesforce excellence. And the beauty of those initiatives, growth initiatives, in my mind is they compound. So if I take costs out, I do it once, I get the benefit once. And if I grow each year, I'm compounding the benefit of that growth each year. And so that's just a powerful part of the value creation playbook.
When you're saying Salesforce excellence, you're talking about the development of the team and how they bring the product to market, not just the software, right?
Yeah. So it's what's our brand in the marketplace? What is our marketing plan? What is our sales plan as it pertains to, do we have a direct force? Do we have a commission force? What's the incentive plan? How do we scale the size of that team? How do we onboard them? How do we put a set of KPIs in place where we can track performance, the efficiency, the success of our sales team? So it's really about like kind of creating a consistent growth engine predictably.
And a lot of times when you're buying from a family business, I assume that maybe if it was run by the founder, that they've done a lot of the sales over the years, or it might have been a major networking force, and you need to develop more people capable of doing that predictably.
Yeah, totally. I think founders and CEOs are generally force of personalities that are naturally great sellers, and so to kind of transition that in a way that we're selling consistently and at a level of scale beyond one exceptional salesperson is an important part of the journey.
Yeah. Looking back at your career so far, are there any key lessons that you'd advise somebody starting out in private equity?
So maybe I'll go lessons that I've had that are personal to me, and then advice for others. I think the things that I have learned are people drive the numbers, not the other way around. And so, as you think about financial performance and underwriting financial performance, there's the accounting math exercise, and then there is the exercise of evaluating, is the team capable and in a position to consistently deliver those returns or that performance. I think the second is that the single biggest factor of underwriting is evaluating the team. And the third is duration is such an important part of this game. You think about where private equity resides in the asset classes. I think We've consistently outperformed the broader markets for two simple reasons. One is we have duration on our side. We can play the long game. And two is we have governance rights that allow us to implement change effectively and efficiently. And so I think that's just appreciating the power of governance and duration here in the business model is important. In terms of like advice for others, I think prioritizing the value of learning. My view is early in your career, focus on developing a personal brand and create experiences which really differentiate you. And if you do those things, financial returns will follow. I think it's easy to get caught up in making career selections as a young adult based on how much you get paid versus what you really enjoy. And this business is so hard. If you don't love it, you won't be good. So just focus on, is this something that I can be passionate about? And then acknowledge that success in the long run is often uncomfortable. And so we're very demanding of our teams. We're very demanding of our internal teams. That's because we're trying to be a high performance organization where we can accomplish things that we're all very proud of.
And the people you're bringing into your organization, where are you typically finding them? You're taking some people from industry, from the operations team that are really great at a particular area. And how else do you build your team?
So first of all, as the market has grown, there have and matured, a lot of service providers have developed practices specifically focused on this market. So as we think about talent, there's a whole industry of recruiters that help us identify specific talent relative to what we're looking for. So we leverage that. As we think about hiring, we're a DC-based firm, and not everybody wants to be in DC. And so, our lesson over 20 years is, as you think about building a long-term team that's going to stay, you got to find folks that have an interest in being in this area. That's kind of got to be a part of the puzzle. How does this person create a life here that's interesting and helpful? The last thing I'd comment is we also have a bias to work with folks that we've worked with in the past. So we have an executive partner roster, which is a number of very accomplished senior execs that help us execute the value creation playbook at the company. And most of those folks we've worked with in the past. And so they know our playbook, they understand the individuals, our personalities. And so we love to go back to the well. And if we've had a good experience with someone, find a different opportunity for them to go help us with.
Got it. And my last question is, I noticed you wrote a book, not one specifically focused on private equity, but why write a book? And are there other ways you found writing to be helpful in your career or a good use of your time?
Great question. Thanks for asking it. So the book's called Family Inc. And essentially the premise is that I have a personal interest in finance. So I was interested as a kid. My dad got me involved. And as I was navigating my career transition from service to grad school to banking, I was trying to, figure out what I kind of characterize as the financial game of life. And it took me lots of mistakes, and I didn't feel like I had a good grasp on it till my mid-30s. So the premise of the book is that if we used a lot of the business principles that we apply every day in my day job, it would yield some really interesting insights to individuals trying to manage their personal finance. And one of the big takeaways is that your labor asset is by far and away the single biggest area to create wealth, right? How do you invest in yourself, whether it be through education or experiences, and how do you position yourself through job choice to really create a compelling career? So I think that's the biggest takeaway from the book. I felt like it was needed in the marketplace because a lot of the finance books that I read are either very theoretical or they're very dumbed down and not targeted at folks who are high potential looking to create and accumulate real wealth. And in terms of like how the writing has helped me, I think writing forces clarity. To put your strategy down on paper, put your game plan down on paper, forces you to really get tight on what you believe and why you believe it. So, I think of the way that translates into my private equity activities. Like when we talk about a strategy document, we talk about a value creation playbook. That's not some theoretical discussion. That is, put it on paper. What are we going to do? How are we going to measure it? And how are we going to execute?
Yeah, I know I said last question, but the comment about Family Inc. and your labor asset being a big driver, are there any ways that you have seen people really invest in themselves to improve what the return on that labor asset is? on the top of my head, I can think of maybe, like you had mentioned previously, taking a job that doesn't pay as much right now, but is really going to give you responsibility and new skills for the future. Are there any other ways that you've seen people really invest in themselves effectively?
Yeah, I think there are lots of ways. So I'll highlight a couple of them. One is just the biggest decision of an investment in education, right? Am I going to go to grad school? Am I not going to go to grad school? Are there professional courses that I could pursue that are relevant? Career selection is a huge one, right? So, and I don't take personal opinions on people's career choice, but I'm encouraging young adults to get comfortable with the financial implications of the career choice, right? And I think that starts as early as, what am I going to major in, right? So you look at the distribution of average pay coming out of college, and the reality is hard sciences, economics, math garner much higher starting salaries than the humanities. So I'm not saying don't go and study humanities, but I'm saying be comfortable with that skill set that you're creating, because that's the jumping point for how that's going to compound over your career. Industry selection is an interesting one, right? Just the same way you select a stock, thinking about the market size, the market growth, is an important aspect. Geography selection is important. People in urban environments make a lot more generally than very rural environments. And so that may not be your long-term choice, but it could be an interesting first couple years out of college. Go to New York, go to Chicago, go to Atlanta, go to Nashville and have that urban experience, develop that network. So, those are a couple of the activities. I think the other one is viewing compensation holistically. So experience is part of compensation. Equity incentives are an important part of compensation. And if you're really looking for wealth creation, probably one of the most important. Anyways, you can tell I'm passionate about this topic, but I think it's an important set for young professionals trying to navigate those choices.
Yeah, I'm definitely really interested in that. The working over the last year on a formula of how I actually evaluate, new job choices and all the different ways you can get paid, basically, both in experience and freedom and flexibility and all those things. So it's not really the space to get into it now, but I am continually surprised at the way people underwrite their education. As you mentioned, the different career choices. I think there are plenty of career choices that make sense, but some people are applying, massive amounts of debt financing for something that will just the math really doesn't make sense. And if they succeed in their career path, hopefully more people can read your book and get education on that early. Would have read that in high school. I hope more people do.
Yeah. Well, thank you. Thank you.
Well, thank you so much for joining, Doug. We really appreciate you on the podcast today.
Yeah, Justin, listen, I appreciate the time and the questions and the interest, and look forward to staying in touch.
Thank you for listening. And thanks to Doug for coming on and sharing his perspective on building industrial businesses through private equity. Manufacturing Excellence is produced by Seraph Consulting. To learn more about us, you can visit us at seraph.com or on LinkedIn at Seraph Consulting. Seraph is a specialized global strategy and operations consulting firm that partners with business leaders to handle their most complex supply chain, operations, and manufacturing challenges. Leaders from across the globe come to us to solve their immediate problems and capture their biggest opportunities. We deliver long-term operational improvements by working with leadership teams, plant floor to the boardroom, enabling our clients to transform their entire manufacturing operation. If you learned something from this and want to make sure that you're able to hear future episodes, subscribe to this wherever you listen to podcasts. Thank you for listening, and I hope to see you on a future episode.